Welcome back to Power Lunch. We have the minutes of the recent meeting by the Federal Reserve, and most participants support reducing the balance sheet this year and doing so in a way that will reduce both treasuries and mortgage-backed securities together. Now, they had a debate on whether or not they should end the reinvestment policy, both either gradually or doing so all at once. The market expects it to be done gradually, but the Fed doesn't provide any kind of indication as to what they believe here. One part of the minute says they prefer to do it gradually. Another says there was no preference for doing it gradually or all at once. That would certainly be a shock to the markets if they do indeed decide to do the reinvestment, end the reinvestment policy all at once. They also debated whether or not to make the balance sheet decline time or data dependent. Now, on monetary policy, they generally agreed that a gradual pace of rate increases was appropriate, but and that the Fed would still be accommodative after the recent hike that they were discussing at the meeting. But several do want a faster pace of rate hikes. And the things that would kind of get to a faster pace of rate hikes include three things: stronger business and consumer spending because of higher confidence numbers; second, appreciably more fiscal expansionary policy; and third, a more rapid buildup of inflationary pressures. Quite a bit of discussion about fiscal policy in the minutes. Several participants say they don't believe that meaningful fiscal stimulus would begin until 2018, so they pushed it back as well as the staff pushed it back. Half of the participants said they have no fiscal policy yet in their growth predictions, but most think it provides upside risk to their forecast. Some saw some downside risk to the policies from the fiscal side, including to economic growth and to the labor force from trade and potential immigration policies. Other risks include the upcoming elections in the EU countries. They say they pose near and longer term risks. Finally, on equity prices, some on the Fed see equity prices as high relative to standard valuation measures. So, guys, a bit of a head scratcher here on this issue of the reinvestment policy. And what that means is when right now, when securities on the Fed's $4.5 trillion balance sheet mature, they end up reinvesting it. And one of the ideas for letting the balance sheet decline would be to stop that reinvestment. And the question is whether or not they stop it all at once, or do they do some ending of reinvestment on a monthly basis? Back to you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.